Hey everyone, welcome back to opportunities.com. If you have ever heard an old saying, sell in me and go away, then this video is definitely for you. And if you haven't, don't worry, we are breaking it all down today. We'll be talking about the stock market performance in the month of May. How is it going to perform in this month? Now that we have officially stepped into May, the big question buzzing in the Indian stock market is, should we expect a correction or is this just the beginning of another rally? Let's take a deep breath and unpack everything. Alright, so let's start with the basics. Where does sell in me and go away this adage even come from? It's an old market adage that originated in the West, particularly in the US and UK stock markets. The idea is pretty simple. Historically, markets tend to underperform from May to October. So investors would sell their holdings in May and come back in November to cash the winter rally. But here's the thing. That's based on data from Western markets. Now the big question is, does it apply to the Indian stock market too? Spoiler alert, not really. But let me show you why. So right now, the Nifty, India stock market benchmark, is coming off a pretty strong rally. For the past 2 months, we have seen about a 9% gain. And that's huge. April alone was impressive, and March wasn't bad either. Foreign institutional investors or FIs have been pumping money into Indian equities again. In April alone, they poured in over 4,200 crore into the cash segment. That's a sign of growing confidence. Plus, India's macroeconomic outlook still strong. Growth is intact, inflation is relatively under control, and the rupee has been steady around 84.50 to the dollar. So with all this bullish momentum, investors are asking, is it time to book profits? Should I actually sell in May? Let's bring in some historical perspective. In the last 10 years, Nifty has delivered positive returns in May 6 times. That's a 60% success rate for the bulls. Not bad at all. And when May was positive, the average gain was 3.51%. In contrast, in the 4 years where May was negative, the average decline was only about 1.56%. So what does that tell us? May historically has not been a bad month for the Indian market. In fact, the odds are tilted slightly in favor of gains. Plus, when you zoom out and look at broader indices like the Nifty 500, the story is even more convincing. 7 out of the last 10 Mays were in the green. Now let's talk about what experts are saying. Kunal Kamli from Bonanza Group points out that May has generally been favorable. The market is trading above all major moving averages, which is usually a sign of sustained strength. From a technical perspective, he says, the major support for the Nifty is around 23,500, while the resistance is near 25,000. So what happens between those two numbers? Well, volatility, maybe a few pullbacks, but not a full-blown downtrend. Meanwhile, Ruchit Jain from Motilal Oswal says this, any dip should just be treated as a pullback within an uptrend. That's an important statement. He believes this current rally isn't done yet. Sure, we might see some profit booking, especially since technical indicators like the RSI are looking a bit overbought. But there's no strong reason for a trend reversal yet. Basically, most analysts are on the same page. We are not expecting a crash. Minor dips, yes. Full-blown May meltdown, no. That said, it's not all sunshine and roses. There are some clouds in the sky. One key concern, geopolitical tensions with Pakistan. We don't know how that situation will unfold. If it escalates, markets could react negatively, at least in the short term. Then there's a global macro backdrop, trade tensions, especially between the US and China. And tariff uncertainties are still a thing. But here's where India stands out. We are in a relatively sweet spot. In fact, Mark Mobius, the legendary emerging market investor, recently told Bloomberg that India could be one of the best performing emerging markets in the current environment. Even Jefferies Christopher Wood is bullish on India. He is actually recommending that investors sell US stocks to buy into Indian equities. Now that's a big endorsement. Let's go back to the FIs for a moment, because what they do matters. Over the last 10 days of April, FIs turned net buyers. They're putting serious money into Indian stocks. That shift in sentiment says a lot because not too long ago, they were net sellers. So what's changed? 1. The dollar index has cooled down. It's hovering below 100. 2. The USD INR has strengthened. 3. Global investors are eyeing India as a safer, growth-oriented market. So when foreign money starts flowing back in, that's often a green light for retail investors to stay invested or even buy more. Now to the most important part. What should you do? Here's the consensus from most experts. Don't panic, don't sell everything, and definitely don't go away. Instead, use any dips as buying opportunities. Keep your eye on the long term. India's growth story is still intact. FIIs are coming back and fundamentals remain strong. But that doesn't mean go all in. Be smart. Have a mix of large cap and mid cap stocks. Keep your risk appetite in check. And most importantly, don't try to time the market based on old sayings. Like Richard Jain said, pullbacks are normal. They are healthy. They are not necessarily signs of a crash. Alright, let's take a quick recap. Sell in May and go away is a Western concept. In India, May has been more positive than negative over the last 10 years. Nifty gained 9% over March and April. The rally could continue with some expected pullbacks. FIIs are back, pouring over 4,000 crore into equities in April. Geopolitical tensions are a risk, but nothing alarming yet. Technical indicators suggest the Nifty is strong with key levels at 23,500 support and 25,000 resistance. The advice, buy on dips, don't sell out in panic. So there you have it. The whole sell in May thing isn't a one size fits all. It's not some magic mantra. In India, the market often moves to its own beat, and May could still be a decent month for investors. What do you think? Are you planning to sell, hold, or buy more during pullbacks? Let me know in the comments. I'd love to hear your thoughts. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss any next deep dive into the markets. Thanks for watching, and I'll see you in the next one.